us on markets today, let's go to the rest of the headlines that we're tracking for you. The fourth headline is Siemens signed a 26,000 crore rupee contract with Indian Railways to supply and service electric locomotives for freight movement. This is one of the slew of orders that the railway service providers have seen in the last few months. Vivek is here on how the order wins have shaped up and how railway theme is playing as a whole.
Well, in the context of the very large win that we've seen Siemens getting, and this is for a 26,000 crore order win that Siemens has got for a locomotive project in India. The company is going to deliver almost 1,200 electric locomotives and also going to provide almost 35 years of full service maintenance. Now, in this particular context of such a large order win that Siemens has received, number one, we analyze, what this means for the company itself and what it means for the overall railway sector in terms of the opportunities and which are the key companies to keep track of. Now, when you're talking about Siemens, remember newspaper reports had earlier alluded to the fact that the company had emerged as the lowest bidder for this particular order win. Now, Macquarie report dated 6th of December 2022 had indicated that this particular order win is larger than the current order backlog of close to 17,200 crore that the company had at the end of FY22. So one single order win is actually larger than the overall order book of the company as of last year. Now, coming to the railway theme and how exactly are analysts looking at this particular opportunity size? The first one, of course, is the locomotive opportunity, similar to the case of Siemens and also the case of Vande Bharat trains. So the likely beneficiaries here, the likely participants in the bidding process, names like BML, Siemens, BHEL, and also Alstom, the unlisted entity, Titagar Wagons, as well as Medha Seva, some of the stocks to keep on the radar. The total opportunity for the Vande Bharat trains in the coming years is estimated at close to 1.6 lakh crore in multiple tranches. Now, coming to the other sector, the railway PSU stocks, a lot of these stocks have seen multiple order wins and also trading significantly higher than what they were around 6 months back. What exactly do they provide? They mainly provide EPC services, they provide project management services, and also services like ticket booking, as in the case of IRCTC. So stocks like RVNL, IRCON, RailTel, RITES, and IRCTCs are seen as the key beneficiaries of this particular trend. Lastly, coming to the budget, the overall capex outlay for railways is something that analysts will keep an eye out for. Upgradation of stations, electrification, and doubling of rail lines is something that is anticipated. Nomura estimates almost a 29% year-on-year growth as far as this particular budget is concerned. 1.8 trillion rupees is the kind of capex outlay that Nomura envisages in this particular budget.
Very interesting, Vivek. Thank you very much for that. We also caught up with the managements of two such companies to find out what they've made of the recent order inflows. Listen in.
The railways are actually going in for a quantum jump. It's a completely new dimension. With the locomotive orders being there, the wagons orders have only to follow. Even figuratively, the wagons are following the locomotives, so the orders also should be followed. In terms of the overall opportunity, I would say it is going to be more than 2-3 lakh crores in terms of the rolling stock itself.
This we already have Wi-Fi at 6,000 plus stations. Till now, we were not having any monetization. After finding this partner, 3i Infotech, we are very much hopeful that they will not only give us minimum guarantee of 14 CR, but will be doing much better.
The fifth headline for the day. Bank of India slid 5% on the back of a weak third quarter performance. Write-offs have risen to 2,500 crore on a quarter-on-quarter basis. That said, the PSU lender has delivered a healthy net interest income growth this quarter. Abhishek is here with the fine print.
Well, the numbers look good given the fact that slippages have declined quarter on quarter. The annualized slippage ratio is at just 1%, which is the lowest that you are seeing in last 8 quarters. Asset quality, the gross NPA ratio is 29 quarter low and net NPA ratio is 31 quarter low, which suggests that, PSU banks may report asset quality being the best in last 7-8 years. The restructured book, that's also declined sharply to about 2.65% of loans versus 3.08% in the previous quarter. Now, deposit momentum, that's a worrisome factor across PSUs. You may see deposit momentum being on the lower side than their private counterparts. Loan growth remained healthy at 18.5% YOY and about 3.5% sequentially. In that, the overseas loan growth was not good on a sequential basis because overseas book has declined on a quarter-on-quarter basis anywhere between 0.5 to 0.6%. But net interest margin. That's the key highlight of the banking results reported so far. It's at 31 quarter high at 3.28% versus 3.04% in the previous quarter, largely to do with the fact that banks have been increasing the lending rates, which has worked in terms of net interest margin improvement. Domestic net interest margin has improved by 23 basis point quarter on quarter, and overseas margin as well, that's seen an improvement of 30 basis point for Bank of India. So in terms of P&L, the NII growth is robust at 64% plus on a YOY basis and more than 10% sequentially. The PAT growth was 12% YOY and around 20% sequentially. They have reported divergence for provisions, which has impacted the PAT growth not being in line with the NII growth. Back to you.
Thank you very much for that. Tata Chemicals has also gained following an overweight rating from Morgan Stanley. The brokerage expects market conditions to stabilize from the fourth quarter and Chinese demand to pick up with Beijing reopening. Sonal is here with the details.
Thanks a lot for that. Well, yes, Tata Chemicals is in focus. Morgan Stanley says that the stock has seen a 20% correction since October. So they are now looking at what next for the stock as well. They say that, yes, they expect market conditions to incrementally improve from fourth quarter, and company-specific triggers specifically are likely to pan out in the first half of calendar year 2023 itself. They are expecting stabilization in the soda ash market. But yes, there is a slow pickup in China demand, but it should see a reversal in the downside pressure that we are seeing on regional prices as well. So yes, they expect prices to remain steady and fundamentally things to work out for Tata Chemicals as well. There is upside to production volumes. There are higher average selling prices that they are looking for. Going forward, US domestic volumes will be the key to watch for Tata Chemicals. Right now, the stock is trading at 6 times forward EV to EBITDA, which is near a 5-year average, implying an average soda ash average selling price of around $240 per ton. This is around 13 to 15% still below the mid-cycle. So there is an expectation that things will reverse, production volumes will improve, and that is something which will work for Tata Chemicals from here on. They have an overweight rating on the stock with a target price of 1,278 rupees per share, which is a substantial upside from current levels.
Thank you very much for that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.